Hey everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I'm here every Tuesday and Thursday at 1:30 to 2 on Tradier Hub. It's such a great honor and privilege to be here. I have over 41 years of trading experience, and I am just so blessed at this stage of my life to be able to teach all of you the futures markets using my proprietary software, to be able to be consistent, to explain the discipline factors in trading, to have the confidence to trade. And this is what I do each and every day during my live stream. If anybody wants to reach out to me, my phone number is 914-500-7484. You know, with the markets being really quiet, tomorrow we have the CPI number at 8:30, and then we have the PPI number on Friday. Again, markets will be very volatile on those numbers once they're released, as we've seen in the prior months. Now, you know, we're seeing very, very low volume here. Very, very low volume. I think people are just looking we're seeing like the market just drift gradually lower. We're seeing a lot of corporate earnings coming out, like Lulu, RBRK, DocuSign, CRM, SNOW, a lot of big names that are carrying the market in the stocks in the S&P. Gold is exploding here, up 31. Phenomenal pattern here off the 15-minute time frame. Gold ran north of about $8 on that pattern on gold. Usually everything I do is based upon using combination methodology. So I use multiple indicators, and then I use multiple time frames. So the combinations of the two gives me the ability to look at the market in the way I see the patterns. A lot of people have told me, they say, of course, indicators lag, and that's fine. Price leads, indicator lags. However, with that being said, what happens is that the indicators that I've built actually set the patterns up for me to be able to get net long and or short. So with that, right now, I'm looking at the screen right here, looking at the spiders on the 30-minute and the 60-minute time frames. Well, I'm in sell mode, right? I'm in sell mode based upon the 15, the 30, and the 60-minute time frame. So all three big time frames, I'm in sell mode. And what does that mean for me to do? Well, let's look here. Here is the first short right here on the 30-minute right here. And here's the second short that we call. I called the short on the S&Ps above yesterday. The short was above 83. There were two great shorts on the S&Ps. Once the 60-minute time frame reversed to sell. We caught the short at 83, and then we caught the short here today. We caught two great shorts here. You can see here, this is the short yesterday at 1:30 above 83, and then today's short on the 30-minute time frame. Right here, we called the short above 73.74. They're trading 62 right now on the S&P. When you do combination theories, when you do combination of time frames, and this is how everything I do is based upon pure mathematics. And again, what's really important is that for each and every one of you, when you're trading, you want to be able to hit your goals and then be able to trade the market. If you can make 4 to 10 handles or 4 to 10 points on the S&P in any given day, or NASDAQ, if you can make anywhere between 20 and 50 a day, in my opinion, that's a damn good day, right? So, and if you make any monies here in gold, if you like, for example, if you used to short a gold at 20, you bought it back at 18, you sold one contract, you're up $100. So again, a lot of people who are trading funded accounts and are trading their own capital, more and more people from around the world are reaching out to me because they really want to learn the futures markets. And that's exactly what I teach here at Tradier Hub. And during my live stream, I do a lot of the correlations. And again, I've always stated from the beginning of starting with Tradier Hub, I've always told each and every one of you the most important thing is to be able, when you're trading the U.S. markets, you need to look at the underlying ETFs. I've taught this to the top hedge fund managers in the world, and it's important for you to understand that outside the U.S. session, which is from 9:30 to 4, I do not look at pre-market or post-market data on the underlying ETFs. I only look at what's called RTH, real-time hours. And it is important and to fully understand that when you're looking at the market during the session, you want to be able to see the math on the underlying ETF trades 6.5 hours a day, where the continuous contract trades nearly 24 hours a day. I think it's 23 hours and 15 minutes, right? But again, during the Tokyo session or the European session, it doesn't make a difference. You can take my software and you can use it and apply it. It's on TradingView. You can call me 914-500-7484 if you want to inquire about the software and my live stream. But again, it is important that everybody that's in my community, they see the patterns. We all work together. I do not give investment advice. I talk about ranges and patterns and why things are going to happen and the setups. But you know what's really great is the fact that everybody that I've been part of here, okay, they really fully understand these patterns. And when they set up, everybody gets so super excited about it. So again, just a real great blessing at this stage of my life. I'll be 62 years old in a few months. And I feel vigorated. I love it. There's nothing greater. My legacy depends on your success. And I just teach the patterns. It's all pure mathematics. And it's just basically allowing people to have a visual, because everything I do is based upon visualization and repetition. And that's really, really, really important. With that being said, if anybody has any questions, please don't hesitate. A lot of people say to me, I'm kind of embarrassed to ask a question. Well, should never be the case, being embarrassed about asking a question. Asking a question is part of learning, right? I don't care if you ask the question 6 times. If I'm answering it and you're not getting it, please, whatever you do, do not yes me to death. Don't yes me to death. That is an absolute knife in my heart. If you don't know, I'll answer it and I'll keep answering it until you finally get it. And maybe I'll have to use different approaches. But again, it's really up to me. Again, like I said, my legacy depends on your success. And I'm so privileged for Dan and Lex giving me this opportunity to be here every Tuesday and Thursday from 1:30 to 2. I wish I could do one every single day, because the markets move and the information and the learning and the guidance is super important. Maybe one day we'll get to that. But again, there's also another great thing when you have slow markets like this, right? And you just see like the S&P just moved like in the last 30 minutes, maybe 2 handles on the S&P. The NASDAQ, I think, ran about 15 or in a 10 to 15 handle range. Oil has just been flatlined within a nickel or 8 cents in the last 20, 25 minutes. Nothing is really moving, right? But this is a good time to learn. This is a good time to, if you're paper trading, learn to use the ladder system. Start, paper, like say, you want to buy some here and put some here, and it's trading up, and raise your stop and cancel your stop below. And this is a really great time for beginners to really, really learn how to execute their orders on what's called a ladder system, okay? With that being said, it's also important that each and every one of you, when you're trading the markets, you really need to understand the consistency factor, because that's important. The discipline factor in always maintaining, putting stops, and that's very, very, very vital into trading. If you're buying something, for an example, in this example, you put a stop in as it's trading higher. You can keep raising your stop and or exiting longs and raising your stops as the futures contracts going in your favor. What else? What's really important also is the understanding that when you're trading the markets here, right, that you want to be able to take the trades, and you want to pick your trades carefully. You don't want to be, especially if you're a beginner, I don't think it's prudent to be scalping here. right? You really, what I teach is wait for the right patterns. In the last couple of days, we caught a couple buy divergence longs in a negative trend. Remember, I told you of the 5 conditions I have. You can have a trend, you can have a buy reversal, you can have a sell reversal, you can have a correlation, you have a disconnect. In each of the 5 conditions, you then have the ability to then you have the ability to recognize two patterns, two patterns of buy and a sell divergence on each of the 5. So 5 conditions, 10 strategies, and of the 10 strategies, right, there are also different. There's a buy and a sell divergence for each. So with that being said, it's important and vital for people to recognize that being consistent in trading futures, and if you once you hit your goal each and every day, if you make $100 a day or $500 a day, if you make $500 a day, and you're consistent doing that each and every day, well, that's about $125,000 a year, right? And there are people that I know in my live stream who try to maintain that goal every single day. Now, with the market being slow, there's really no margin for being able to scout the market. That really pertains to markets that are in what's called fast markets. I mean, here, for example, gold on the last pullback just ran about $1.06, $1.50, $1.60 just now in gold. But again, what's really important here, is the understanding that nobody should be fearful of trading futures, right? People, if I said to you, let's trade water, people may say, oh, well, that sounds a little bit better than trading. I always tell people, what are you nervous about trading futures? It's if you're trading options, if you're trading stocks, you're trading ETFs. The great thing about trading futures is that you got a great tax advantage on the first 60,000, God willing, of profits, and then you have with Tradier, you have great margin for micros and for the big S&P futures contracts. But what you really need to maintain and fully understand is that when you're trading the markets, okay, you want to be able to recognize the pattern. And that's what I teach during my live stream, right? Here, for example, on the S&Ps, you had what's called a double red short, right? S&Ps went from 64 to 62. So let's say you sold 1 or 2 micros, you just made $20 less the fees. If you sold 1 big one, you just made yourself $100 on the S&P, right? So what we really need to focus on is to be able to recognize these patterns. So here, for example, if you look at the spiders here, let me just see, where am I? Well, here's the S&P here. Okay, so here the S&P is now trading 61.5. They just got up to 62.5, 64.5 there. So in this example, the 5-minute time frame reversed to sell. It correlated with the 15, and then it just caught this short here off of the 5-minute time frame. Nasdaq future just dropped about 10. But with these patterns, you just wait patiently for these patterns. And this is the short I was telling you right here. You can see actually the 15-minute time for S&Ps just dropped 3 here. The spiders were negative on the 15 to 30 and the hourly time frame. And so when the S&P futures, the continuous contract, just reversed to sell right here, it then correlated on the 15, it's 15 with the spider 15. So what do you look to do? You look to short the first bounce right here on the 5-minute. And that pattern actually did set up the short on the 15-minute time frame. If you look here on these, where am I looking at? The spiders here. This is the spiders from this morning. You can see at 12:30, this is another bounce here on the 15-minute time frame in the negative trend, because the 15 to 30 and the 60-minute time frames are negative. So you take the short on the 15-minute time frame, and that's why we were calling shorts on the S&Ps at 73, 74. A lot of people said to me, "Wow, this has really opened up my eyes using the underlying ETF." And I also look at the SDS, which is the Pro Ultra Short, and I look at the same thing on the SQQQs. And when I look at the QQQs and looking at the Nasdaq futures, right? So, but what people need to remember and people need to focus on is that when you're looking at the markets and you're trading the markets, it's important that you don't have to trade every tick. You wait patiently for the patterns to set up as you see. And, so I already know coming into the morning, the first thing I do, the mindset I do, I come in, I look at the bigger time frames, I recognize it, boom, S&P is down 3 here now. And then I say to myself, okay, I look at my economic calendar. Well, there was nothing really on the economic calendar today. Now, tomorrow, we got the CPI, like I stated earlier, and the PPI on Friday, but nothing on Thursday. Sorry, PPI on Thursday, nothing on Friday. But again, it's all relative to what your appetite is. Do you want to trade the pre-market, or you want to wait till the dust settles when the markets open at 9:30? I like to trade into those economic numbers. I mean, there are times, you really could call it a day. But again, you have to be more experienced in trading in those type of situations. And I cannot recommend anything, but I would not, if I was a new person, I would not look to trade in those fast markets. I would not look to trade in those fast markets. And especially if you're new. So if anybody has any questions, be looking to hear if you have any questions here. Again, what's really important is that when you're trading the markets, right? And again, it's so slow, right? Literally, the S&P's just dropped 3.5 points here, almost 4 just now, and in the last 15 minutes, and it's just really slow here. But we can see, looking at where the market is, we're very overextended here. We're very, very overextended. So I'm looking for pullbacks to make higher lows, and ultimately, I do believe that we're going to be in a market for the first quarter, and my target is 65 over 6,500. Once 6,500 comes, I would be exiting. I would run for the hills. I do believe we'll get some type of a pullback, and that pullback breakout should be between 48 and 5,200. The breakout level on the S&P is at 4,800. So if you take the measure move, if I am correct, 6,500, let's say perfect world scenario, 4,800, that's 1,700 points, right? Roughly, let's see, 1,700, 65, 48, 1,700. And then what you do, if you take the measured move, okay, you take 1,700 and then you add it to 6,500. If I'm correct, you get 8,200 on the S&P in the next couple of years. That's how I look at it. Again, it's really an unbelievable. Okay, it really is a unbelievable market, especially when the things get going. I do believe coming into the first quarter, once Christmas is over and coming into January, I think you're going to see crazy volatility, crazy volatility. What's going to happen here is that when you're looking at the markets, you want to be able, like I said, to be in that situation that gives you the ability to position yourself, trade effectively, and again, using multiple time frames, using the underlying ETFs to assist you. I do believe that this is something that could really enhance your trading. And for me, I think there's no greater joy in learning from me, from someone with over 41 years experience, but also having technology that I can teach you that you could use on your own, because eventually you want to be able to fish on your own and learn. S&P is down 4 here right now. Okay, S&P is down 4 here
We
right
have
now.
a question, Steve.
Sure. Let me see. Yep. Where's the question? Hi, Steve. Hey, Sev. Basically, you're watching more closely ETFs like SPY this morning. It was in sell mode on the 1 hour, 30 and 15, but S&P was in buy mode on the 30, 15. And because ETFs are in sell mode, you were more looking. Yeah, so basically, that's a great question. I was more I think I said I weigh more. S&P is down 5 now. I weigh more heavily on the ETFs, right? And then when the continuous contract, Sev, on the 15-minute time frame reversed to sell, you can see here on the S&P right here, this is the short, right? So the 15-minute time frame reversed to sell, okay, on the S&P futures, but I do during the US session weigh heavily more on direction from the underlying ETF. And in this case, both the 15, the 30, and the 60-minute time frames are in sell mode, okay? So guy wants to change my filters on my air conditioning. Okay. So but then basically what you want to do is when the 15-minute time frame reversed to sell, we then look for shorts because now a correlated Sev, right? And now here was this is the first double red short right here. Here's the push up on the 5-minute against the 15. And here's the other 5-minute time frame correlating with the 15. And here's the short on the S&P. So just on the day, we're up over 20, 25 handles on the S&P on a slow day. So that's not bad. That's not bad, right? I think that's great, actually. But again, what's important is that when you're trading the market, you want to be able to recognize the path, right? And you want to recognize the pattern. And this is what I teach each and every day during the live stream. So, Sev, in that question, again, the hourly, the 30, and the 15-minute time frames were in sell mode, and I decided to. The rule of thumb is the bigger time frames are going to be on the underlying ETFs are going to rule in that favor. S&Ps, look at them, they just dropped 5 handles here. A beautiful pattern on the S&P. What else is going on here? Okay, let's see here. Everything's flatlining, which is not good here. Everything's pretty much flatlining. Okay. All right. Let me just see here. If I only had a brain. Okay. Does anybody have any other questions here? Anybody else have any other questions? Okay. All right.
There's another one.
Oh, also the Qs were in buy mode this morning, but the MACD above the pivot, and that's what you were looking for sell. Well, let me look at the Qs. That's, what time frame are you talking about on the Qs? The Qs are negative on the 1 hour and the right here. So when the Qs pushed up this morning, you can see here, I would have been shorting that against the 60-minute time frame on the NASDAQ. You see that push up right here, Sev? Right here, this push up right here, I would have been shorting against the 60-minute time frame. Look at the negative MACD here. You get a better chance of going to the Vatican, knocking on the door, and meeting the Pope, right? So look, where is that going? Just down 4. Do you see that? And here's the 15. The 15 reversed to buy, but when the 15 reversed to sell, what do you look to do, Sev? You look to short every bounce on the 5-minute time frame. That's an absolute Picasso. Do you see that there, Sev? Okay. Do you see that? Okay. And then the 60 and the 30-minute. So when you go back here, you can see the 30 and the 60-minute time frame. Where am I going? Here. You can see once the 60-minute time frame reversed to sell, that was yesterday, right? You can see here when it pushed up this morning, the 30 and the 60-minute time frame never went positive. Never went positive. Okay. 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 Oh my God, just got kabooshed. All right. Okay. Let's see here. Oh my God, $4. All right.
There's another question.
Another question. See if you're paying attention on your moving average on the 1530 and it's 1 hour. If it's below, does it mean more of a sell? Okay, I gotta understand this one a little bit better here. Give me a second. Let's see here. See if you're paying attention on your moving average on the 15, okay, and 30 and 1 hour. If it's below does it mean more of a sell trend? If the MACDs are below the pivot, okay, it's more of a sell trend because it's guiding down, right? But eventually what happens is I'm more cognizant of waiting to see if when the MACDs are below the pivot, those are my favorite, right? Especially the 15, 30 and hourly, because eventually what's going to happen? Eventually they're going to turn up. From what level? I don't know. But eventually they're going to turn up from below the pivot, and that's going to be a very powerful move on the upside there, okay? That's going to be a very powerful move on the upside. All right. Does anybody have any other questions? Okay, but these are 3 great questions, Sev. I'm proud of you. That's really great. Really great job. Also, there goes gold. Gold just rallied about $1.50 since we've been on. Okay, S&P's dropped 5. NASDAQ futures went from 80 down to 54. So NASDAQ just dropped about 27 just now. All right, and here we go. S&P's making new lows here on the day. S&P futures. All right. Again, one of the things that's really important, okay, is, again, you see the questions Sev had? These are great questions. And for people who are out there, every question is to be answered. Don't ever be fearful of asking a question. It's important that you really pinpoint, understand. If you don't understand it, just keep asking and asking and asking. Because, again, like I said, no question is stupid. All right? Again, I'll see you here on Thursday at 1:30 to 2 on Thursday. I'm hoping that in the beginning of the new year, we do more of these, maybe Monday, Wednesday, and Friday. I'm hoping because to me, there's nothing greater. And I think you're going to see a lot of increased volatility come the beginning of the year once the holidays are out of the way, once New Year's is over, and we go right into 2025. I'm Stephen Kalayjian. Thank you for being here today. I'm Back to the Futures. I will see you here Thursday at 1:30. God bless you, and God bless the United States of America. Be well, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.